up? What's up? How are you doing? I'm super excited. You're welcome to this amazing episode, guys. If this is your first time, you want to make sure you click on the subscriber button and also you click on the notification bell. This episode will help you. And as usual, if you have any question from the previous trainings, make sure you drop the question below in the question box, and we will get solutions to help you, I and my team. Okay, good. So in this episode, we're training you on what is called order block. Now, order block comes in when you are approaching the market as an institutional trader, which is what we do in institutional trading concept group. So what we do basically is that we want to understand what the institutions are doing and how they are approaching the market. Now, what makes order blocks simple? Now, to understand how order block works, take it as what happened. There was a previous bearish move that created a new bullish move. An order block is situated inside here. That is where an order block is. Now, what it means is that there will be imbalances, orders, pending orders that the institutions will want to use to join the moving trend. So this is a potential order block level. So how do we now identify this? Now, because the market dropped and it dropped as a bearish move, there will always be a bearish candle, which is a lot of time red candle. Then the bullish move starts. The bullish move starts. Now, when the bullish move starts, this becomes your order block. This becomes your order block. This becomes where you are expecting the market to what? To come back into. Now, does that mean that we can't get order block in between? No, we can also get order blocks in between the bullish move. Okay. However, I recommend a order block that has a break of structure. So let's say, for example, this is there is a move that has happened before, like this, before it dropped, and the market came and broke this. Now, if this is a red candle followed by a bullish move, this becomes an order block, because it is taking that the banks, the institutions, they took up from this, they loaded the orders here to break this previous high. That means that they could have pending orders here. So we have order block 1, then we have order block 2. So when the market comes into this place, we have a potential reversal, or into this place, we have a potential reversal. What of if it is a sell scenario? If it is a sell scenario, you are dealing with the previous move high, which is a bullish move right now. Now, the candle will always close with a bullish candle. Then the bearish candle starts and drop. Here, it becomes your order block, your order zone. So this is your order block. So you are expecting the market to retrace back into this place, then you sell here. Good. So here it will be a bearish candle followed by a bullish candle. Good. So with that, let's go to the board and look for a clear and simple order block that you can use to enjoy your move. So that you can trade. Watch carefully. I have to look for it because let me go to 1 hour. Good. Let me just do 1 hour. Good. Now, previous move has been bullish there. Good. This is it. We had this bearish move. The market dropped. Okay, the market dropped here. Watch carefully. This is a bearish move. The market dropped. And it created a new bullish move. Don't forget, this is bearish. It dropped. Now, what is the last candle here standing? The last candle here is this. The last bearish candle here is this. This is the last bearish candle. So this becomes our order block. Now, when the market moved up further, it created another what? Order block. Remember, I said that you can have two order blocks in a movement. Why? Because this is the first one that was created, that was initiated. This is the second one. But if you are being asked which order block broke this break of structure, this is the order block that broke this break of structure. So this is the order block that you are going to be trading. Now, the first order block has been used by the banks here. The institutions have used it. The market has triggered the orders here. So right now, there are pending orders here that we are looking out for in the future that the market was going to come into. So immediately, the market went up. So we are expecting the market to come into this zone. So watch carefully. Immediately the market came into it, this become your what? Your order block level. So how do you trade order block? To trade order block, don't forget that it has the color, there must be color discrepancy. You have the bullish move, you have the reddish candle. So to trade this, there are two ways. You can trade this as a full candle, which means that you are going to be risking more, okay? And you can also do 50% of this candle move. So, which is what I recommend. Now, or with one I use. Okay? Now, why do I use it? And it also has advantage and disadvantage. The disadvantage is that you will be missing a lot of trades. Sometimes the market won't come into the 50% of this candle before taking off. It will just kiss the peak of it and it will start going up. But check this. This one actually came into the 50% of it. So to trade an order block, you want to use 50%. Okay, if the complete move, the complete candle is having so much risk. For example, this is 17 pip stop loss, and this is 12 pip stop loss. I'll prefer 12 pips any time. As a matter of fact, this is 11 pips. I'll prefer 11 pips anytime, any day to that. So watch this carefully. The market did what? Skyrocketed and moved up. So again, let's watch. I'm going to stop it. And now let's deal with the new one. Let's deal with the new one. So the market has created a bullish move, a bearish move, and went up. As a matter of fact, went up and broke this high. As it broke this high, this will be another block. One, this is the other block that created the move. This is the other block that broke the structure. So we trade it. Watch carefully. So it took the trade here. Why? This is the other block that broke the break of structure. Then you can go to lower time frame. This is 1 hour chart. You can go to 1 minute or 5 minutes and trade this, redefine this entry so that you can get the best of it. Okay? And notice that this guy did not do 50%. He didn't do 50%. So you probably must have missed out in this trade. So that is why some traders use the full and they go to lower time frame and trade it. Okay? So watch carefully. It went up and went far and delivered. Went far and delivered. It got to the peak. So you have to go in 5-minute charts and find a way to get this reduced if you really want to reduce it. Okay? And you're going to be good to go. So let's say, for example, I want to reduce it. I want the video to be short. So let's just stick to picking of other blocks. Okay? So number one, don't forget, there must be an established trend or move, not trend, established move. This is sell move. Then the market went up and broke it. Immediately it broke it, you look for the other block inside. You look for the other block inside. Then you wait for the market to come back into the other block. Then you put your entry, your stop loss, you go in. You put your entry, your stop loss, you go in. Okay? So what I also recommend is that you must trade this pair in the session. You must use your session trading. Okay? You must trade it in the session. So if it is GBP USD that you are trading right now, it should be in London session or New York session. Okay? You must trade it. And with that, you can kill the market and you're good to go. Guys, don't forget, if you're just watching and this is your first time, make sure you click on the like button. Like this video right now. Click on the subscriber button. Make sure, okay, so that you don't miss out in any subsequent video and you're good to go. Okay, so let's take, for example, I want to look for a sell scenario. I want to look for a sell scenario. Okay, this is a sell scenario, though it's short, but it's a sell scenario. Remember, this is lower high, lower low, lower high, lower low, right? And this is the last bullish move. So, and we have the new bearish move. So this new bearish move, I said, look for the other block in it. So to look for the other block in here, you select the last bearish candle. That's the other block. Okay, this is other block. When you are trading other block, you select the wick, you select the low wick. Okay, now this is different from rally-based drop. This is other block. However, 90% of the time, your other block is always in your rally-based drop or drop-based rally, which is in supply and demand. Okay, so other block is used to place orders. Supply and demand also are levels that you also use to place trade, but it has difference. They are both different. But for this video, I'm sticking to order block, placing trades using order block. Good. So if you say that this is demand zone, so you have this also as the other block. Good. But you won't use this one, because if you come here right now, you will see that the market came in 11 a.m. Okay, the market came in here 11 a.m. So personally, I like the origin. This is the origin. This is continuation, but this is the one that broke the break of structure, and we expect the market to come back into it. So if you use pending order here, your stop loss would have eat you out, but you use 1%. Good. Then you come back here and use 1%. And because it is 2, you can divide your lot size, your percentage risk, 0.5%, 0.5%. So if these guys hit you out, don't be angry. Okay? Great, good. You can see the second trade got triggered, and you would have taken good 35 pips, depending on your risk reward, which I always recommend you go and trade this part on 5 minutes. For those who are in the community, you already know that you know how to trade this part on 5 minutes on lower time frame. And you can use that to catch this move downward. So your stop loss should be like 2 pips or 3 pips, 2 or 5 pips stop loss. And if you pick that trade from here to here, 35 pips or 34 pips, that would be about 1 to 10 or 1 to 10 or 1 to 7. Okay? So, and here, if you do your lower time frame confirmation, this will not be a trade you will lose, except you are using pending order. So pending order has its advantage. That's why we call it risk entry. It has its own advantage, and it also has its own disadvantage. But if you are a professional trader that you are after your risk reward, you won't want to do pending order here. You want to let the market gives you a on the 5-minute chart or 10 minutes chart, your confirmation entry, and you're going to be good to go. I hope this video helps someone. Okay? All you need to do is to, if you have any question, type it below so that we can help you answer the question. And if you choose to be in the community, please drop your comment, drop a comment below, or you email us on contact@owolabi.com. Okay, it's always in the description below on how to contact us. My team will definitely help you out if you choose to be in the community, so you will not miss any of these trades. Okay, like I do tell everybody in the group, you don't need more than 1 to 3 trades in a week to remain consistent in the business. Guys, I'm excited, and we're good to go. So I look forward to your success. And if this is helping you, make sure you go into the comment box and say, this will help me. Type in below in the comment box, this will help me. Okay, guys, that'll be all for now. I look forward to your success, and I'll talk to you soon. My name is Mayowa. Peace out, guys.